You might not know who he is, but he changed your life more than Michael Jordan, the iPod, and YouTube put together.
Good Monday morning to you. My name's Jason Graneman, and I am your lone slayer for the day. Welcome to your Economic Market Weather Report. Let's get into it. The Dow equities, they are up. Well, there's a good reason for that. There has been some looming discussion, and I touched on it, well, hardly touched on it a few days ago regarding Jerome Powell and whether or not he was going to stick around for another 4 years. Well, it turns out Biden has selected Mr. Powell to stick around and manage the Fed for another 4 years. This is significant. It's boosted the Dow's reaction to confidence in the economy. What does this mean? Well, consistency. It's somebody that we're used to. It's policies and procedures that the market probably feels like they're predictable. There was some discussions about somebody else stepping in, and I'm not going to get into who that was or all of that because it's already in the past. But since we're going to keep Mr. Powell around for a while, well, consistencies, some anticipation, things of that nature breed confidence back into the market, and that is helping the Dow or equities to have a good morning. So it's sunny, mild temperatures. We may even see even more of a boost as we go through the day, but pre-market was up about 150 points. Treasury side of things, the bond market, well, it's deteriorated just a little bit. We are basically back to where we were at the beginning of last week. So we gained overall about 0.5% Friday morning in total for the week. In other words, bonds got better. Mortgage interest rates specifically got better by about 0.5%. And then by Friday afternoon, well, they retracted a quarter-ish in cost. And therefore, this morning, they retracted about another quarter. So whatever we gained last week is unfortunately gone. We're back to, well, Monday ago. Can I say Monday ago? I don't know. So treasuries are a bit gloomy. The mortgage interest rate market a little bit gloomy today. We'll see where it goes. There's more on that coming up, which may support the direction that we're headed. So stay tuned. More on that in a minute. Let's not forget crypto. Again, I don't focus on crypto in depth on this channel, but it's certainly worth noting. And when it's notable, let's note it. Bitcoin is up at 58,856 at the very second that I pulled those numbers. They change constantly. And this chart is interesting. This is the last 24 hours. There's been some movement. It actually dropped down to 56. Check this out. Some what I would call a bit radical movement, 60 down to 56, back up to 58, and that spike was very, well, quick. It wasn't even at an angle. It was straight up. Watch Ethereum. That's the other one. I've noticed, this isn't always the case, but I've noticed patterns between Ethereum and Bitcoin tend to look very similar. So keep your eye on Bitcoin, crypto. Those are the two I would recommend watching for the temperature in that arena. Now, in other news, Space shot up to 38%. I mean, literally shot up. They launched their first rocket into space, and as a result, their stock basically did the same thing. Now, I don't know how much excitement I would have over their first rocket. Give me a few more launched into space. Rivian and Ford, I guess they were just casually dating because apparently they just broke up. Now, about a week ago, we covered Rivian and Ford was getting together with Rivian as well as Amazon to build an electric vehicle. Well, I guess Ford broke up with Rivian and said, nope, sorry, I'm not going to court you any longer. Perhaps Ford just couldn't compete with Amazon, though I didn't get the feeling they were in competition. It appeared they were all coming together jointly to build this EV, but apparently Ford just couldn't hang in there long enough to get married, and so that relationship is over. As a result, Rivian is down a little over 3%. Nothing major, but of course, news of that nature can bring a stock down. Confidence, future, all of those things going bleak for Ford and Rivian. But we'll see. Rivian's still in the game, and as far as I know, intend to build, or at least participate in building, an electric vehicle. Perhaps with Amazon. We'll see if they get married. Let's get back to mortgage rates for a moment. Well, the bond market weakened overnight, or over the weekend, I guess you would say, and mortgage rates are a bit higher today by about 0.25% in cost. So nothing drastic. The rates are still extremely good. It's cheap money, and I don't know of another place you can borrow money at or around 3% at an interest rate. So it's extremely cheap when you're looking abroad to borrow money. And of course, times are still good. Homes are still in demand. And in fact, there is still a shortage. November happens to be the first month of many where the Fed will begin to roll back its investment in mortgage-backed securities, or the bond market that's related to impacting the rates with mortgages. Mortgage-backed securities, the MBS. Well, the Fed has come out and said months ago, this is no surprise, that beginning this month, November, they will invest $5 billion less in mortgage-backed securities and will reduce every month thereafter. So next month in December, another $5 billion less. And this will eventually wean itself off come mid-2022. However, what this really means is without that money going into the MBS, we will probably see a weakening or a increasing trend in the mortgage rates because there's less money. That was a given, something that the MBS could bank on receiving was federal money purchasing MBS. And in those bond arenas, the more money you have going into it, well, the more money is available to lend. So more resources mean they can bring the prices down. Our mortgage rates have been, well, fantastic over the last year, and a large part of that has been a result of this consistent money, predictable money going into that MBS marketplace. So with this rollback, if we aren't seeing additional money come in from other areas, in other words, if there's a lot of confidence in the equities market, well, we may not see a shift of money, in which will continue to put pressure on the mortgage interest rates, and they may, as a result, continue to creep up. So let's keep our eye on the mortgage rates, the MBS, mortgage-backed securities market, and see where these rates go as a result of the Fed peeling back their investment monies, purchasing those bonds. Something definitely to keep your eye on.
Mortgage-backed security, or private label MBS. You've got your average person's mortgage, fixed rate, 30 years, boring, safe, small payoff, right? But when you have thousands of them all bundled together, suddenly the yield goes up, but the risk is still small because...
A little segue from mortgage rates is the housing market. In the housing market, well, demand is still up. In fact, October numbers are out, and demand is up 12% from a year ago. Well, with that said, the median home price is also up 13% from a year ago. That's quite significant. Demand is up, so of course we expect home prices to be up. And then the amount of homes that are on the market is a shortage in comparison to demand. All of these go hand in hand. It's really economics 101. But when you lay it out and analyze your housing market, these are important components to look at. Now, the rates are also creeping up, and we just got done speaking about some of the reasons why, not all. Since August of this year, the average reported mortgage interest rate was 2.78, and as of October, the average reported interest rate is 3.22. Something the news won't give you, but if you do the math, that is also right about 13% increase from what the rate was a few months ago to what the average rate is now. How that correlates, well, you can be the judge. Will we see home sales slow down as a result of the interest rate creeping up? Or will we see home prices level off as a result of the interest rate creeping up? I'd love to hear your thoughts on that subject. Put them in the comments below. I'd really appreciate getting to know different perspectives, because one man can't be right, and I certainly don't claim to be right, which is why I don't make predictions on this channel. Now, if you like this content, please hit subscribe so you can get more of it. I'm going to have a special Christmas video you won't want to miss. My name is Jason Graneman. You're watching the Economic Market Weather Report, and I am your lone slayer for the day. Remember, it's not work, it's a lifestyle. Cheers.
Because, well, they're mortgages. And who the hell doesn't pay their mortgage?